We're going to switch gears right now to our first plenary session that's going to discuss the current status of the North American carbon market. I would now like to invite Katie Sullivan, from Managing Director for IETA, and the other members of the panel up here for that discussion. Katie?
Very much. Hello, hello. Hi. I don't know about you, but and it might be because we're out of practice, but this is just the opening plenary. And it feels a bit like we've already been here for a lot of days and kind of the closing plenary, only because yesterday was jam-packed with pre-conference sessions and then a lot of networking. And that was, some great deep thoughts. Unfortunately, Patricia Espinosa, Fred Krupp couldn't join us live, but that was fantastic as well. So we do have 3 panelists, and I want to make sure that we can get Judy Meltzer. She's coming in live from us from Canada.
Hi there, Katie. Can you hear me?
We'll let the AV sort it out. So Katie Sullivan, Managing Director at IETA, International Emissions Trading Association. It is my honor to be here today and to speak with Eduardo and Randy and Judy about the latest state of play across North America around carbon markets, climate policy. There is a lot to cover. And so we want to jam a lot of great stuff in here. We won't get to everything, but it's also a nice teaser for a lot of the sessions that will be happening later today and tomorrow for deeper dives, right? And so I would also, just a heads up, we would love to have time for some audience questions and comments. So start noodling right now on what that might look like. And later on in the session, if you put your hand up, I believe that Jenny or one of the other great staff from CAR will come along with the mic. So I also just have to say, just quick show of hands. How many was NACW 2020, the first major event that was canceled before the pandemic? All right. So it was the first major event that was canceled for a lot of us. And little did we know that we would be in for 2 years of hardships, major challenges, anxiety, losses, but also on the market side of things, what a couple of years it's been. Whew. On the compliance, pre-compliance side, and on the voluntary market side. And I have to say, it's wonderful to see so many old familiar faces, but it's also incredible to see so many new faces, and not via Zoom. All right, so let's get into the North America scene. We have Randy Lack, who will be a familiar face to many of you, the founder co-president of Element Markets. We have Judy Meltzer, who is the Director General, Carbon Market Bureau, coming to us from Canada. Can you hear us, Judy? All right, that's a good sign. And we have Eduardo Piquero, who has been a fellow traveler for many years and comes to us as CEO of Mexico CO2, which is linked to the Bolsa, the Mexican exchange, and has been involved in the Mexico scene on carbon markets for many years, but also much more broadly across Latin America and globally. Randy, let's start with you. All right, so United States. So we'll go US, Canada, Mexico, bit of a roundtable, okay? Right. And I think let's look at the major games in town, at least compliance-wise first, around the California market, CCAs, what you've seen, and let's hop to the East Coast with Reggie and what we're seeing on that side of the country.
Yeah, so, well, thank you for having me, and it's great to be here. And you're right, it's like having that reflective moment of being canceled in 2020, thinking we're gonna be locked down for a couple of months, and 2 years later, here we are. So it's great to see all the faces and great to be back here and kind of reflecting back on that period. That was a traumatic time in the carbon markets. following the lockdowns of COVID, the uncertainty of what was going to happen in the market, we saw a collapse across the traded marketplace. And you look at California just starting there, and we thought that the floor price of the auction was inherently going to be the floor price for the marketplace. And following the lockdown, we actually had a lot of groups that ended up getting liquidated as we went through those markets, as we crashed through the floors, as margin calls came out in the market. It's started in EU and spread across, impacting the CCA and Reggie markets. And so that's where we were 2 years ago. And we've really repaired the markets following that time. Crashed down to about a $12 level on CCAs and have recovered back up as high as $35. Now we're going through the scoping plan, and we're getting clearer and clearer direction about where we're going to go on the long-term status of the California-based program with confidence. And just as we go into that, we have the Ukrainian invasion, right? And so, and again, we have a little bit of a, I would say a smaller version of a washout event, but it's really interesting to see, and this goes for the CCAs, it goes for Reggie, really goes voluntary carbon, all of it. And now we're having this correlation of uncorrelated products. And so it really comes from the sentiment in the marketplace. And the market following the Ukrainian invasion drops down to $24. We've now recovered back up over $31 per ton. And it's really about these macroeconomic impacts and their sort of correlation to the underlying value on the markets. Overall, what I would say as a sentiment is we're in a great place around the California cap and trade marketplace. I would love to see a market that is even more supportive of offsets. We've stepped down around the program from an 8% usage of offsets to a 4% usage allowed for compliant entities, 2% from direct environmental benefit to the state, and 2% from outside of the direct environmental benefit to the state. And overall, those outside of the fence activities, we've seen amazing projects invested in and continue to see dramatic investment in order to support the generation of reductions around the program. And we are, being an economy-wide program, we are starting to see, as we eclipse the $25 per ton value, we're really getting to the point now where we're seeing behavioral changes at physical facilities relative to the price of carbon. And that comes in the overlapping nature of an underlying price of carbon and adding to that the sustainability initiatives. And so we're really starting to see, I think, those sort of green shoots of activity that are transformational changes in these businesses that will affect them for the long term. I think there's an overall long-term bullish belief around CCAs and a good confidence that California will continue to support the program. We do step back up to a 6% usage of offsets for this community in 2026. And I think that's going to be a welcomed sight given some of the restrictive allowability of offsets in for the 21 to 25 period.
Good rundown. There's going to be a lot of other sessions later on about what's going on in these markets. I forgot to ask you about your news because it's kind of important. We had a big IETA meeting yesterday, and I know some of you were at the meeting, and I wasn't going to do a roll call at first, but I thought, oh my gosh, there's a lot of new faces, but also there's a lot of faces I know, but I actually don't know the name of the organization anymore because there's been mergers and acquisitions or they switched. So do you want to quickly, before we head to Judy, just the quick news about Element Markets and Blue Source, just so the rest of the crowd knows.
Thank you. So, Element Markets and Blue Source Source announced in February of 2022 that we have merged. So it's a really exciting evolution for us and for the marketplace. Blue Source started in 2001, Element Market started in 2005, and both companies have grown to be leaders in the North American marketplace. And we had an opportunity to sit down together last year and explore the potential evolution of our businesses to be able to reach scale and to be able to offer a comprehensive platform to the marketplace. We, just like we heard about this morning, we have to accelerate and we have to bring transitional capital and transitional impact to the marketplace. And at the end of 2020, Element Markets was majority acquired by the Rise Fund, which is part of TPG's private equity firm. It's the largest climate impact fund in the world with $13 billion under management and growing. It's led by Hank Paulson, former U.S. Secretary of Treasury, former CEO of Goldman Sachs, and Jim Coulter, who was the founder of TPG. And the intent was to really bring meaningful transitional capital and be rapidly accelerating in order to meet the near-term objectives we have around climate change. And so when we sat down with the great team at Blue Source, we've always had a mutual admiration. And it's interesting, we've been around the space so long, and both companies have had tremendous success almost in different ways. And so, to quote Bill Townsend, who's the chairman of Blue Source, there was almost more underlap between the businesses than overlap. And it was a great opportunity to bring it together, to give Element Markets access to nature-based solution markets, expansion to geography in Canada. We both had renewable fuels businesses that we could combine and grow, and then bring it in with the environmental commodity expertise and international positioning that Element Markets has. It was really, at first you sit down with somebody who you envision as a competitor, but we sat down and in less than 2 hours, really all saw the vision, and it came together pretty quickly. So really excited to be combined with the amazing team at Blue Source. And over the next couple of months, we will be announcing a new brand and a new focus for the combined entity. So it's an exciting time.
There's a bit of confusion out there still. Element Markets, Blue Source, and so no, that's great. And so it was important for the whole group to know about kind of the story in the background. And there's a lot of the team that's floating around here, and you just see it a lot these days, right? It's really exciting. So, Judy Meltzer, we miss you. We tried to get you down, but that's okay. You're doing critical work. And it was not that long ago, just over a week ago, that Canada announced its new major emission reduction plan, the ERP. So for those who have not been tracking what's going on in Canada, and it's never, ever boring in Canada, but maybe just some of the quick highlights from the ERP. And why it matters, including from just simply a governance framework, and then a bit of a deeper dive into what's happening, at least at ERP, carbon pricing and markets through 2030, and then what's keeping your team really busy around the post-2022 discussions with the provinces and what to watch. Over to you.
Thanks very much, Katie. And I'm clearly a laggard, and I wish I was sitting in that empty chair with everyone. And I hope I'm not being projected on too big of a screen for everyone's sake. But I'm really happy to join, and definitely hope to be joining in person soon. So that's right. So I'll give really high level just on some of the recent developments. As you say, there's a lot of things going on in the climate space in Canada right now, and spend a little more time on where we're at in carbon pricing, and then obviously happy to provide more detail as there's interest. So we did just release a really landmark document on March 29th, which is our 2030 emissions reductions plan. And this is important because it was tabled in Parliament. It's the first plan to respond to new obligations on the government under our Net Zero Accountability Act, which was passed in June of 2021. And basically, this is to increase accountability and transparency in terms of how we are making progress to achieve our 2030 target of 40 to 45% reductions below 2005 levels by 2030, and of course, net zero by 2050. So this is the first of many plans under the Act, and it basically sets out some concrete milestones as to how we're going to achieve those targets. It has more detailed modeling and sort of potential contributions also broken down by sector in addition to our economy-wide measures. And so it sort of provides some guideposts in terms of actions and investments that we're taking in each sector. So it's quite, I won't try and do it justice in a few minutes, but it includes a whole suite of, confirmation of current and forthcoming measures, new mitigation measures, and, significant investments, including $9 billion of new federal investments in climate action. Very, very quick highlights, not related to pricing, which I'm going to come back to, but it includes the development of a Canada Green Building Strategy and related investments, further incentives on EVs associated towards achieving, our ambitious targets in terms of light-duty vehicles of 100% ZEV sales by 2035 and interim targets of at least 20% by 2026 and 60% by 2030. It reiterates the commitment to cap emissions from the oil and gas sector in Canada, as well as develop more stringent regulations on methane. We're currently consulting on a discussion paper as to how we can achieve the target of reducing 75% of methane emissions from the oil and gas sector by 2030. And of course, it also speaks to the transformation of our electricity sector and greening the grid, including the fact that we're consulting also on a clean electricity standard to help achieve our target of net zero electricity by 2035. So there is, I do recommend it is a really good one-stop shop that and highlights some really important new investments and measures, and kind of gives a really good overview of how Canada's plan hangs together and how we're going to achieve our targets. So definitely happy to come back to some of those. We are going to, under the Act, we have to also follow up in very short order to provide regular progress reports. So the next one will be in 2023, again in 2025 and 2027. So it really does go a long way to in ensuring there is transparency and accountability in terms of progress towards targets. Let me turn just briefly to where we're at on carbon pricing. As you said, Katie, it is also an interesting and I think important time on carbon pricing in Canada. So it remains, of course, a key pillar of Canada's climate action plan. And the aim and our approach, and I know folks have probably heard me talk about this quite a bit, so I'll go over fairly quickly and happy to come back. But basically, in the federal side, our role is basically to ensure that there is a similar level of pricing on GHG emissions across the country. Because we've had such leadership from our provincial partners on carbon pricing, provinces like British Columbia, of course, and Quebec, of course, with California, have had robust and different types of pricing systems in place for a really long time. So our approach remains consistent. We give provinces and our territories the first kick at the can to implement their own pricing systems, and we ask that these be aligned with consistent minimum national stringency requirements, so what we call the federal benchmark. So there is flexibility for jurisdictions to continue to implement the system, the type of system that makes sense for their circumstances. So we still have a mixed landscape, and we expect to continue to have a mixed landscape where we have some direct pricing systems in some jurisdictions, like carbon tax and fuel charge, together with an output-based pricing system for industries, as well as cap and trade. So it is definitely an interesting landscape. What I want to highlight is that we have recently tightened or strengthened these national minimum stringency requirements. So we published some updated requirements in August of 2021, and these will apply from 2023 out to 2030. So currently, the federal government, as well as our provincial and territorial partners, we're busy looking and reviewing our systems to look at what adjustments we need to make in order to meet those updated requirements. And just to note where a provincial or territorial system is not in place, or where a jurisdiction would prefer the federal government to implement its system, we continue to play that backstop role with our federal fuel charge and our output-based pricing system for emissions-intensive trade-exposed industries. So just to quickly highlight some of what I think are the key updates in terms of what we're going to require of all pricing systems. So one, I think, of course, to state the obvious, is the commitment to an increasing price trajectory out to 2030. So the government has committed to, currently the minimum price for direct pricing systems is $50 Canadian a ton, and it will increase starting in 2023 by $15 a year out to $170 in 2030. So that's a key requirement in the updated benchmark. Other things that I would note, we are setting requirements to ensure that where there are emissions trading systems, output-based trading systems for EIT, industrial emitters, we're ensuring that the credit market there is robust. We want to ensure that there's a strong price signal in all of our credit markets. And so the benchmark requirements, the requirements for all systems who have that in place, will ensure that, for example, the credit market, the marginal price signal will track closely to what is the minimum benchmark price. So we think that's an important adjustment. There's also requirements, of course, to ensure that there are robust offset systems, transparent reporting, and more consistent emissions coverage. And some of these changes reflect consultation that we've done and a review of carbon pricing in Canada with our provincial and territorial counterparts, with stakeholders and Indigenous groups, but also an independent expert assessment of carbon pricing in Canada. So we've tried to address what were considered some areas where we could continue to strengthen it to make sure it's effective. So basically, the next steps there is we're expecting our provincial and territorial partners to provide us with information on how they plan to adjust their system to align with the new requirements. We're expecting to get that information this spring, and we'll be working together through the summer. And ultimately, we expect the federal government will clarify this fall about which system will apply where, because we need to give as much certainty as possible prior to 2023. And we're also in this process reviewing our own output-based pricing system for industry. We've already updated our fuel charge to reflect those higher rates. That trajectory is now embedded out to 2030 in our own schedule of our legislation. And we are consulting on changes to our own output-based pricing system for industry, including considering tightening rates to ensure that the market is robust. So we'll expect to be coming forward with draft and regulations through the usual regulatory process over the coming months. Katie, I'm taking up a lot of time here, but let me just very briefly end on an update on our federal offset system, because we are looking to publish final regulations. We've been talking about them here for a few years, so we're really excited to say that we're about to publish, we're expecting to publish final regulations later this spring. And those will set out the operational requirements of the system. And in parallel, we are developing protocols which set the quantification requirements for each project type. And those are being developed outside of the regulation, but we expect that when the regulations are published, we will be in a position to also publish a first final protocol. And the ones that we're working on and developing first the first is a landfill methane recovery and destruction protocol, and that will be hopefully finalized and published when the regulations are. We're also moving forward with a protocol to reduce emissions from refrigeration systems, and we expect that will be hopefully finalized later this summer. And we're also in the process of consulting on protocol development for improved forest management, enhanced soil organic carbon. That one will take us a bit more time, and also livestock feed management. So those are sort of the first priority protocols that we're engaging on. And we also expect hopefully to be in a position to announce which are the next tranche priority protocols later this spring as well. So I'm going to pause there. I realize that was probably just a bit of an overload, but really appreciate the opportunity. We're really excited about the developments that are happening in terms of climate measures in Canada right now.
Judy, Meltzer, thank you. There's a lot happening though, right? And it's important stuff. And so many consultations, clean energy standard, methane, your OBPS amendments, the provincial equivalency. I know you don't like when I say that, but proposals that are going through over the next few months, right? Intense stuff. And I'm glad you talked about the offsets protocols and what to expect in the project types, because I know that'll be of interest to certainly many in the room. So don't go anywhere, but we are gonna go now south to Mexico. Hi. And let's actually first start, Eduardo, with just the political situation. You had the updated NDC, December 2020, right?
Right. And
it's been a bit of a roller coaster, let's say. You do have a pilot emissions trading system.
Correct.
Many people are like, what's this? Well, unless you went to the actual Mexico session yesterday and the workshop, but what's the current state of the Mexico ETS? How far along are they? How serious are things around like moving from kind of, okay, cute pilot to it's game on? Let's start there. Political situation, the Mexico ETS status update.
Wonderful. Perfect, Katie. And thank you very much for having me here. I'm extremely happy to be with all you guys here in California. It's extremely important for Mexico to strengthen ties also with California, always. As you've just mentioned, the Mexican NDCs have been updated in December 2020 and was somehow criticized because of its lack of ambition and whether that would drive additional emission reductions. However, I need to mention that interest and the push from government towards the Mexican ETS remains there, and the program is being implemented. And this current administration that has already 4 years in office, it's implementing and developing additional parts of the pilot and has already closed its first year. The NDCs, however, had several discussions and were socialized with different sectors in Mexico. It still has the very approximate and emission reduction figures to the previous NDCs, and will probably be more ambitious in terms of adaptation and so forth, sectors that for Mexico are extremely important. So coming back to where the ETS remains today, where our cap and trade program remains today, basics on our pilot is how many companies are participating. Around 60 to 70 companies from the large industry and energy sector are participating in this compulsory pilot that it's covering emissions with a threshold of 100,000 tons located all around Mexico. It's about 600 installations nationwide, so it's quite of an important figure, and has already closed its first year during the last couple of months. So we still have no prices to tell you still. I know that that's quite an important figure that we're all wanting to know what prices stand, but allowances have been submitted and companies have already returned allowances in a 97% of compliance. That remains, there's a 3% no compliance from the first year of the pilot. First year, that was 2020. We are now closing 2021, and 2022 is the last year of the Mexican pilot. First year of compulsory is 2023. We're just months away from the first compulsory phase of the ETS. There is a lot of talking right now on regulation on price transfers. The government is quite concern about an increase, of course, in energy prices in Mexico. And of course, the Russian invasion to Ukraine doesn't really help the discussion with government, with prices going up all over the world. There's a special interest in the electricity sector since Mexico is undergoing or discussing an electricity reform these days. Discussion is also being held on which additional sectors will be included in the next phase. I assume aviation is the sector to be included for sure, that some other additional changes might be made. I also assume that the threshold will be lowered. And
right now, right now. Sorry. Right now, just to be clear for everybody, the threshold is
100,000 tons. That's quite a high.
Okay. It's not originally they were planning to do lower.
They're planning to do. Now it's kind of high. They're planning to lower the threshold. I assume probably 5,000 tons would be a good first step. And probably lower that within the following phases. There is also a lot of discussions on linkages. Of course, Mexico is always looking up to our wonderful neighbors in California and Quebec, and try to join forces in some sort of linkage. I do assume that the linkage may also be gradual, and we might have different phases. Of course, allowances is also something. Not allowances, sorry. Offsets. It's something that the Mexican government is extremely interested in with our neighbors in the north. Perhaps a limited agreement would be something that could be under discussion in the next following years. The Mexican government has also developed the protocols for specific sectors to produce offsets for the Mexican ETS. Those sectors remain methane, all kind of methane reductions, landfill, livestock, forestry, and nature-based solutions. That's something that has already been done. It's already ready to be published. And transportation, that remains Mexico's largest emitter sector in so forth, even most importantly than energy. But I'm extremely positive, Katie, on what's going on today. We've seen a lot of new projects in Mexico. Most of them, 90% of them, registered and listed under the reserve. Most of them in the nature-based solutions sector.
Many. I'm on many
There you are.
voluntary projects across Mexico. CAR.
Yes, but provisions for the new Mexican nature-based solutions protocol may include those projects that have been registered under international protocols.
Yeah.
So that means that they all could also be valid under the Mexican ETS. So that's very extremely, very important news. One more thing, and I'm going to close it here. At the federal level, we have a lot of things going on at the Mexican ETS, but let me tell you that a lot more are happening at the subnational levels. We have the state of Jalisco with a very bullish approach on emission reductions. We have carbon taxes developed by several states around Mexico, from Tamaulipas in the north, Baja California on the other side. We have the state of Mexico, including a new carbon tax that had already been passed. We have over 7 different states that will already have a carbon tax. Querétaro in December. Querétaro is Mexico's China, that it's growing 14% every year, and the economy is boosting in Querétaro. It's kind of our engine, the engine of the economy. So that's why it's keeping me very positive. All those taxes do already include or are including offsets. That's our job, to include offsets and to generate emission reductions. So we're discussing with many of them to include an emission reduction provision that includes offsets as a way of covering
And are they quite aligned?
Carbon tax.
In the design of the tax and the offsets, are they pretty aligned in communicating? The subnationals?
So, but yeah, but they do remain aligned.
Yeah. Good stories. Okay, good, like good stuff going on. Now I know there's actually a Canada deep dive on Friday. There's a Mexico deep dive. Friday too. Is tomorrow Friday?
Yeah.
Like I said, I'm losing track of time here. All right, so I said, there will be an opportunity for questions. Keep noodling. I don't know where the mics are, but get ready to start putting your hand up. But let's do one more round. Randy, back to you. U.S. federally. So you heard Fred. You talked about a lot of great things, including how they're going to be ramping up efforts, not just across U.S. states for more advocacy on carbon pricing and markets, but also federally in D.C. So you being in the space for as long as you have, environmental markets and the roller coaster ride that we've seen everywhere, including across the U.S., including Washington, D.C., what's your thinking about windows for federal legislation, commitment, environmental markets? Really?
So let me start by saying I feel like a bit of a contrarian here, and even internally inside of the Blue Source Element Company, I make a statement and people will go, really? I believe we're going to have federal carbon legislation certainly in the next 5 years. That's my current view. And my view comes in sort of like a non-linear route, which is, quick story. I was sitting talking to the board of one of the largest emitters in the United States, and you're talking about carbon offset, sustainability, ESG, and I was warned about one of the board members. They said, this guy is anti-climate, not a believer, sort of like he's the old curmudgeon board member who's been there as a staunch opposition to every environmental policy. And like in the middle of my presentation, he stops me. And I won't say what he said in the beginning of when he stopped me, but after that, he basically said, "This is the Wild West. We're going to have to do this now. So I wish they would just regulate us so we could pass it on to the consumer." And that to me was like a bellwether moment of where we're going to have the push to have climate change regulation. And what occurs to me, and I'm listening to Judy about Canada, and I'm listening about Mexico, and I'm looking at the United States market where we have California industry-wide program, Washington's coming out with a different program, Reggie's power only, and none of them are linked. And we're ending up with these balkanized programs. And we're only going to be successful if we figure out a way to put it together in a larger way. And I'm not saying we're going to have one uniform product globally, but that we need to have at least programs that have some basis differentials to each other that are sending those price signals. But my belief is that we could have some bipartisan, and I think we will likely have bipartisan support that will just come from, number one, those that don't just want a price to pass through and know that this is fundamentally something that's going to be the new currency, right? We have this new currency, it's impacting their business. There's a wealth transfer underway, and they want to pass it through at the pump, or they want to pass it through to the household, and they just want to be able to have it as a cost of doing business versus everybody doing different activities. And of course, the climate proponents pushing for regulation. So I think when you put that in a room and you add that it's very difficult to go to DC and lobby against climate change right now, there are very few groups that would show up. And this is different than just 5 years ago, where to go show up and to lobby against climate change regulation, you're probably over there with, guns and tobacco, right? Where, you're kind of like, that's your grouping now. And so you start reading those tea leaves and you start looking around, and I know we have a very difficult political environment in DC, but you start to see the pieces of belief that a bipartisan agreement could be put together for the support of a program. And my utopian hope is that we which I think is less likely, by the way, but we have a program that starts to really put the Reggie, California, Washington, Canada, Mexico markets closer together to where the pricing signals can be shared throughout the marketplace.
Judy, does that sound familiar? The stitching together.
Yeah.
Yeah, I mean, it really does. And I turn my camera on again as well. Just, I mean, it's really resonating. And, it's interesting, there's lots to kind of jump off on the points you've just raised in terms of the US context. But the one thing that is, we're learning as we're engaging on a variety of, and, of course, regulatory measures aren't the only things in place. We've got a whole bunch of push and pull factors. But the one thing we're hearing as we consult on developing regulations is allow that transparency and flexibility, let market systems play the role and function as they're intended. And it is and then the questions come up about, as you say, how do you use, for example, I mean, just as one example, how are proceeds used in that context to help mitigate carbon leakage and cost impacts, help assure affordability. So I think it's interesting. We've certainly got some ambitious a kind of a heavy lift in front of us as we develop an oil and gas cap. But, industry is very much, many of them have committed to net zero targets themselves. And I think there are really good conversations going on in terms of how you can leverage market-based instruments among the mix with a whole bunch of other supports to kind of drive reduction. So I just think that's it's really interesting just to hear sort of the debate about different instruments and the advantages and what each one brings. The one thing we've heard and we're coming out with soon, and Katie, I'm just going to do one more shameless I guess update is we've heard that regulatory certainty over the longer term is such an important piece of this puzzle. And so the other big piece that we're coming out with to put in place is final clean fuel regulations. And again, we're hoping to see those later this spring as well. And again, what we're hearing is that it's that regulatory certainty over the longer term, whether it's pricing or clean fuels or other instruments, that is really key to be able to help continue to unlock investments. So I'm just going to pause there. Thanks for letting me jump back in.
Yeah, no, it's great. And of course, the Clean Fuel Standard Regulation, how could we forget that one? That's a biggie. And I think we will kind of explore that a bit more during the Canadian session on tomorrow, which is Friday. But there was also a little drop in the emission reduction plan, a little drop, an ITMO drop, I call it. Article 6, ITMO, both Fred and Patricia mentioned it during their opening remarks over here, Judy, and I'm not sure if you heard about it, but I think that before we go to the floor, and we have about 15, 20 minutes left, so we still have time, they're gifting us more time. So you are, Judy, looking at, and then I'm going to go to you. You are looking quite heavily, and you've been very explicit in trying to enable intra-Canadian linkages and harmonization. So federal, OBPS, output-based pricing system with the markets that are happening provincially. Maybe saying just a few quick words about that and actually like fungibility with recognized units that is occurring and we'll likely see more of. But then also how your team is working with the international team in Canada. And I know it's earlier days, but draft ITMO framework and, the Article 6 piece. And then I'm going to come to Eduardo and ask kind of a similar question related to just the ITMO type Article 6 pilot thinking. So Judy, you.
Sure. Thanks, Katie. So just on the first point in terms of fungibility, so that's right. I mean, in a way, there's some. So right now, I mean, there is not full fungibility across pricing systems and credit markets. That said, there are some, I think, interesting developments and signals. So there is fungibility, for example, of an industrial facility that's regulated under the federal output-based pricing system, so the emissions trading system for industry. They can use what we refer to as an eligible recognized unit, and what we mean by that is a credit from a recognized provincial offset program for compliance under the federal system. So that's required that we put in place memoranda of understanding with different provinces who, such as Quebec such as BC and Alberta, to be able to enable that. So I think that's an interesting development, and that's been in place for the past few years. It's also the case that our federal system is national in scope, and while we are designing it to not, duplicate complicate or tread on the toes of provincial offset systems. We don't want to complicate the space. It's certainly the case that if there was a desire, and I won't speak on behalf of provinces and where they're going to go with their particular systems, but it's certainly the case that federal offset systems, in theory, federal offset credits could be used for compliance. So I think there are some interesting possibilities for further fungibility between credit markets in that sense. The other thing I would note is we did explicitly flag in the consultation paper we put out in December on our output-based pricing system, our federal system for industry. We actually did note that over time, further linkage across systems, of course, we know that's more efficient, can help offer lower cost reduction opportunities. That's something that we want to continue to discuss with our provincial and territorial partners, and it's not something that will, happen overnight. That's something that will, potentially take time, but we're certainly clear that it's something that we want to talk about and discuss further. And one of the things that we have already signaled publicly is we will continue to work and keep taking stock of how pricing is going in Canada. So we are going to review pricing, continue to review it by 2026 again, and potentially those are the kind of things we can, continue to look at in that context. But again, this is early days, but we're certainly interested in the conversations. ITMOs, yes, there's an explicit signal. So as you know, we've been prioritizing domestic reductions, of course, but of course, we're and no formal decisions around ITMOs have been taken on the federal side in the Canadian context. That said, of course, the developments around Article 6 are important, and what we've signaled is that we certainly recognize that depending on the design of things like the oil and gas cap, which is still in early days of consultation, so we don't have an approach, but depending on the design, it may be the case that there are opportunities for offsets, whether it's domestic or international in that context. Again, this is just preliminary and it's being put in the window, but I think it is important to signal that. But we do continue to prioritize domestic reductions.
Right on. Thank you. Yeah, the oil and gas cap, watch that space. There's going to be some really important, because we don't know what the design is. So get involved. Eduardo, a little bit about just Article 6, and then we're going to go to questions. Okay. Article 6, Mexico. Is there discussion? What should we be watching?
Well,
maybe broadly across the Pacific Alliance.
Question.
Okay, it's a hard one.
That's a difficult question. But is Mexico looking into Article 6? Yes, Mexico is looking into Article 6 mostly as an offset supplier worldwide. Probably the Ministry of Environment is not looking into Article 6 as a means of to connecting with California and Quebec, because there are subnational entities, and Article 6 means state by state and so forth. But I do believe it's a complex situation for the Ministry of Environment. It's complex because Mexico has an ETS, it's a pilot ETS, it will become mandatory and fully implemented next year. So it's very, very difficult for any entity worldwide to have an offset system that would allow companies to export emission reductions and at the same time reduce emissions nationally. So I do think that the complexity and the coordination of Article 6 itself, it's a very, very hard challenge for any country, not only for Mexico, but for any country. It means that you need to know very well, practically in real time, what your emissions are and how many emission reductions would you be able to export. But what I envision the idea that the Ministry of Environment has is to allow exports of emission reductions from certain sectors. That would mean, of course, nature-based solutions and blue carbon. And demand is there. There are a lot of projects being developed as we speak. I would also try to encourage that discussions within the engagement group between the private sector and the Ministry of Environment would look deeper into that. Right now, that group is looking into offset, a lot into offset, and which other sectors could produce offsets for domestic use and internationally. And it's looking into which other sectors should be included into the next phase of the ETS. Another big discussion is to lower the threshold between government and the private sector and MRV system. That's something that needs to be improved for the full implementation phase. So yes, I do think Article 6 has a future. Mexico has a future for Article 6, and mostly some specific sectors, as I've mentioned.
That's helpful. That's helpful. Thank you, Eduardo. So question, or we have a microphone there. Questions from the audience? Put your hand up. Andre, did you have a question? Andre?
Andre Templeman. They'll turn it on at some point. Hello. Hello, hello, hello.
Microphone, please.
I can just talk loud. Drop the mic. I know. I guess one question. I mean, we've been coming to this thing, Katie, for these things for a long time as we all get older, balder. Sorry, I didn't mean that to be specific. And we've been around a long time. I was talking more about my head, but I mean, does it feel sometimes like we are, California's doing a great job, so's Reggie, so's certain places, but we're bailing out parts of the Titanic as we're all catering towards this. The IPCC came out and said, look, we're not going to make 1.5 degrees. Not likely. I would argue it's a couple more years before we say we're not going to make 2 degrees. We're probably going to have to stick to 3 degrees. And at this point, you're going to have to build, carbon capture facilities. I think some of the estimates I've been seeing are 1 facility a week starting today, globally on a large scale to be able to avoid even 2 degrees. And that is trillions of dollars of investments. I guess one of my questions is, when do we start moving from mitigation to adaptation, and do the climate pricing programs enable that shift to really a revenue raising and significant spend? And how does that happen? And how do those markets transition? As I believe they can. I'm not suggesting markets don't work. I just think they're going to have to change.
I think it's a great question. Let's go, Randy.
Yeah, I mean, so look, two things. Yes, the numbers came out last year. There was about 32 billion tons of CO2 emissions worldwide, right? So we have to get that to 0. And there are a lot of countries that are not going to reduce. So that means a lot of countries have to go beyond 0. Really, what we have to look at is, you look at agriculture, steel, cement, chemicals, you look at these really hard to decarbonize industries and say, how are we really going to get there? How are we going to get off the fossil fuel addiction? How are we going to transition the way that we operate as humans? But we're starting to see real potential for change, right? You hear a lot about green hydrogen, green ammonia. I mean, 10 years ago, we did not think we would have the leaps of electric vehicles that we've had and the transformative benefit that can have for global emissions. And I understand that there are issues with electric vehicles in and of themselves, but we're making significant progress in all the above. I think the big thing is really that currency signal, right? So to have carbon as a currency across all platforms and really having behavioral change occurring around those pricing signals. And that means you have to make the emitters change their behavior. That's going to come. It can come in cross-border adjustments, and that's maybe a way you can get some countries otherwise couldn't afford to have those impacts see an economic impact of behavior. But you're going to start to have to see that sort of, and I said that's alluded to, that sort of basis market emerge, where you see these correlation between products and markets, where you're really going to have to push that through. I agree, we're behind schedule. Right. And we basically just lost 2 years. And I think that, coming out of COVID, there's two ways to look at it. Number one is we lost 2 years of progress. The other side of it is that I think by nature of COVID and just a general feeling of responsibility of each other and seeing the butterfly effect of a pandemic and the effect on each other, we're almost at this point now where there's this feeling of responsibility for each other that is heightened more than it was pre-COVID. and it's really taken environmental with it. And so I am more optimistic today than I was 36 months ago, both on what we're seeing as regulatory policy advancements, as well as technology advancements, and around fuels too, just lower carbon intensity fuels. And we're really a big proponent of focusing on carbon intensity in the overall impact of everything from sustainable aviation fuels to natural gas impact to other drop-in fuel solutions.
Arthur.
Thank you, Katie. Arthur Lee with Chevron. I'm also a member of the IETA Council, the Board of Directors. I'd like to address the questions to, well, mainly to maybe Judy, but also a little bit to Randy as well, about Article 6 again. And again, with Article 6, as much as I love talking about paragraph 2, 6.2, how countries really can voluntarily group themselves for emission trading, I also want to get your views, maybe all three of your views, on how you could influence 6.4. Because that too, in my experience for a long time with the CDM, that CDM took a long time to develop, not only the market, but also, of course, the project methodologies and all the criteria that went into it. So how do you think that you can help in accelerating 6.4 so that too can become a real strong policy instrument to help and do things so that countries and project developers and companies can take action? So thank you. 6.4.
So if you don't know what 6.2 and 6.4 are, track me down later and I'll point you in some directions and analyses. So 6.4, how do you influence the new mechanism?
We have 4 minutes. So,
or we also could just say the influence that you could have, or the call to arms for those in the room to be more involved in these markets as they emerge, including as the Article 6 piece becomes operationalized. I mean, it's also game on for Article 6 operationalization as we head through Sharm el-Sheikh. There's also a session, Article 6 deep dive tomorrow, that's happening, but.
Very quickly, I'm pessimistic on 6.4. I do think that, again, the degree of coordination that we need is not happening, and we need to get there very, very fast. I don't see governments in general, of course, Mexican government moving fast enough on 6.4. I do think that what we will have in next forthcoming medium term is a lot of national approaches, and Mexico is moving in that direction with national protocols. The discussion following that would mean a lot of complexity that perhaps we don't have the time for. But again, I do believe that discussion is extremely difficult and time consuming. I don't see much going forward in the forthcoming years.
Good answer. Thank you for being honest.
Sorry.
Yeah, in the future, I would appreciate more softball questions while I'm up here.
This is what I knew.
Yeah.
When you get the IPCC
Arthur and I have known each other a long time, and we've had a lot of debates over the years. Look, I mean, the bottom line is that dollar flow is going to impact behavioral change in governments, and it's really happening. And so when you start looking at issues around, for example, like just looking at corresponding adjustments, you're going to start to see significant differentiating in pricing in those markets. And then as developers or as participants in those markets start seeing that their credit prices are selling for lower, hopefully the voices rise up inside of those governments asking for at least clarity. Overall, we really, I think dollars are going to influence policy now, and that is a great outcome. It's actually a great outcome with the international voluntary marketplace. And I like to think of the voluntary market as pre-compliance, because I still do think that's where we're heading. We're just in a pre-compliance phase of the marketplace. And as we have dollars really flowing into projects, into adaptation change, avoided deforestation projects, reforestation, afforestation, methane abatement. When you see those dollars start flowing, but they're not receiving the pricing signals in the market because they're getting a discount in value, that's when people start lobbying their governments and showing them that it's impacting local economics. And so I think the behavioral change has to come, if we're doing our job, from pricing signals that we send to the marketplace. And we're already seeing it. We're already seeing differentiation where a 2021 vintage is less than a 2020 vintage credit. And it defies logic because it's newer, it's fresher, but wait a minute, this could have a corresponding adjustment. So I'd rather have last year's. So we're already starting to see behavioral change in the market. And I think that is what's going to cause the propensity for influence.
We have 1 minute. Is there one more question? All right, a quickie from Brad, right?
Hi, thank you. Brad Neff with Radical. And Randy, you brought up a point with your curmudgeon story. And I think a lot of us experience that same thing where people want certainty in the market. They want to know that they're investing in something that's going to have value. And we're building this airplane as we go. And a lot of us are working on action. A lot of us are working on standards and what are those actions going to be worth in the marketplace? And maybe not a softball question, maybe a thoughtful, maybe there's no answer here, but how do we accelerate that activity while we, in the back room, the nerds are working out the math for how much we still got to throw the water on the fire as soon as possible and stop arguing about how much good it's going to do before we actually do it. And so any thoughts about how we accelerate action while we're still coming up with all the rule books and all the unclarity that still is in the quote unquote market?
Well, maybe what we do is your final thoughts. So think of that as your Brad tee up for your deep final thoughts of how do we accelerate things. And again, thinking about the audience here today, the next day and a half of, really important sessions, some happening simultaneously that people want to go to at the same time. But just parting words for the group ahead as they navigate, the journey ahead, but also navigate the sessions over the next day and a half. So Eduardo, you go first.
Oh, thank you. I was just writing now. Yes. I'm scared about the level of ambition and what we need to do in the forthcoming years. There is a lot to do in terms of generating the projects we need, not only south of the border, but worldwide and the rest of LATAM too. That's something that we haven't talked about. But I think that the next 2 years will be will have a definition whether we are successful or not. And we need money is already there. Companies are already there. The member of IETA has doubled within 2 years. So there is complete agreement that we need emission reductions and that markets are the solution to drive cost-effective emission reductions. So we need to do it, and we need to do it fast.
Excellent, thank you. Judy, final thoughts?
Yeah, I mean, great question. Just really quickly, and I'm going to come at this more from the regulatory side. I think, and we hear this, like providing certainty and longer term certainty to unlock investments, ensuring that our markets are robust. And for us, that means I'm talking our compliance markets and how we design our regulatory measures and pricing instruments, et cetera, market-based instruments is really important so that we're unlocking and not inadvertently dampening or discouraging. And then I think there's interesting conversations to be had, or what are other ways we can de-risk investments. And just one last thing that was signaled as something that we want to further talk about and explore is things like contracts for difference, where you can kind of find ways to help de-risk investments over the longer term. So I'll leave it at that.
Thank you. And Randy, just crisp final words.
Yeah, so there's transformative capital coming into the market at risk. And that's new. And so, case in point, Rise Fund, who's our backer, $13 billion fund, and that's their first, this isn't their last fund, right? They're going to keep growing. And the intention behind this is impact. And there is a measurement of impact along with capital for their fund. You're seeing more of these funds coming out. They want to be on the bleeding edge. They're taking technology risk. They're okay with unhedged carbon exposure. So we're starting to see more of that capital come into the market, and it's coming quickly. And it's moving out of oil and gas and into ESG. And so again, pocketbooks matter, and they're looking for that transformative, impactful technology. And so I'm amazed. I mean, there was, Climeworks came out, raised $650 million for direct air capture, and I think they have revenues of $4 million. Right, I think that's right. Don't quote me on it, but I think directionally that's about right. I mean, it's incredible the amount that's coming in to back the companies around the shift that's needed, and it's really bleeding edge money. And we just have never seen that come in before. And so that's what gives me the optimistic view around money coming into agriculture, money coming into new fuels, sustainable aviation fuels. We didn't have a sustainable aviation fuel facility in the United States until, 4 years ago, I think. And now, there's been an announcement of 14 facilities. And so, it's a really exciting time in the space. It gives me optimism. I think we're behind, just like Andre's question. We're not, I'm more optimistic, but I'm not confident yet that we're going to get there. But money talks.
So I think that, again, it was an honor for me to moderate this opening session. We covered a lot. And I want to thank Judy, Eduardo, Randy for joining me. I want to thank all of you in the audience for joining us. Enjoy the rest of NACW, and a special shout out to the CAR team who works their tails off to make this happen. So thanks. A big round of applause for everybody.